Hi there. Welcome to this week's Canola PROCAST. Just want to give you a quick update on what's been happening over the past week in our canola and soy markets. On Thursday of last week, we had the USDA's World Agricultural Supply and Demand Report. In that report, they took exports out of the U.S. on soybeans down 60 million bushels, which is a pretty significant move. It brought our carry out in the U.S. to 530 million bushels. That's plenty of soybeans and a pretty heavy S&D. The reason for taking exports down is the U.S. just continues to be uncompetitive with Brazil for global exports of soybeans. They produce a higher quality soybean there with better protein than what we see in North America. And China prefers to buy that soybean relative to the U.S. soybean at current price levels. The other thing that's really been driving our soy markets has been Argentina weather. It's been hot and dry. The extended forecast has had quite a bit of heat and dryness in there as well. And so when we have a really big fun short position like we've had here for the past few weeks, they've been betting on a decent sized crop in South America. As the rest of the market starts to put a risk premium on what that crop could actually look like and starts to reduce yields, we've seen that the fund position start to cover. And so we've seen the short move pretty significantly over the past weeks to cover, and you've seen soybeans rally 30 cents as the funds have been buying, with the farmers in the US and Brazil starting to sell into it. Really, this has been a soybean meal led rally when you have a problem in Argentina, which is a massive exporter of soybean meal and crusher of soybeans. Soybean meal tends to lead that rally, and so we've seen soybean meal up 25 to 30 bucks. This is really favorable for soy crush margins. Unfortunately for canola, oil has kind of stayed put and actually been a bit weaker in the face of the strong rally in soybean meal. And so from a canola crush margin perspective, it's been somewhat supportive, but not as supportive as if we had had a rally in oil as well. Speaking more to canola cash markets, we've seen farmer selling pick up quite a bit here on the rally. We approached and we have gotten above $500 a few times over the past week, and the farmers starting to engage. They've been pretty bullish futures and basis levels over the at the previous levels, but they have been willing to set some basis and restricted their pricings, and now we've seen that pricing pick up. Good to see that the farmers starting to engage as we've moved higher in our range. Crush oil business, it's really slowed down here. We're entering Chinese New Year period, and so this is pretty normal to see the demand slow down out of Asia during this window. Expect that'll probably take place for the next week or two, and then we may see some oil business pick up as we come out of that New Year holiday. In addition to really strong soy markets, and some fun short covering in both the canola and soybean pits, we've had a weaker Canadian dollar, and that, as we've been talking about over the past few weeks, if we could get something from the Canadian dollar to help support our markets, some weakness, that's how we could bust out of that range that we had been in. So we've seen that, and that really helps support our canola market as well. So we're now at levels that are above kind of the midpoint level of our range. We think it makes sense to start pricing some canola here, both for old and new crop. We do anticipate a pretty significant amount of canola acres will get planted this year. Obviously there's some hesitation around how dry it is out there, and understand that from a grower perspective on not wanting to necessarily price out high yield expectations, but at this level it certainly makes sense to start. We could see a push higher, if funds want to continue to cover. They're still short in both soybeans and canola, so if they want to continue to cover, we could see things push higher depending on farmer engagement. But we have quite a significant on-farm stock position in canola, as you all know, and comparatively heavy global S&D picture. So I think it makes sense to when looking at prices relative to historicals for some risk to be taken off the table and some pricing to happen. Thanks.